Hello, and welcome to the 2025 C-Suite Outlook and Sentiment Study Preview, brought to you by Executive Councils, which includes Chief Executives Council, Controllers Council, Operations Council, and IT Executives Council. I'm Lindy Antonelli, partner in the technology practice at Armanino. We're a top 20 accounting and technology consulting firm. I'm also the board chair of the Controllers Council. Let's take a look at our agenda today. First, I will share some brief housekeeping items. Then I will introduce our panelists. Third, a quick word about our sponsors. Then we'll dive right into the survey and study results and our panel questions and discussion. Now for housekeeping. We will have a Q&A at the end of the presentation, so please use your GoToWebinar control panel to ask our panelists questions. Finally, you will receive a link to this webcast via email in the next 24 hours, so no need for notes or screenshots. Now with that, I'm very pleased to introduce our panelists. The Executive Council CEO, Career CMO, Chief Marketing Officer, and author, Neil Brown. Neil, welcome.
Thanks, Lindy.
A special thanks to our sponsors for making this timely and important presentation possible. Citrin Cooperman, Tax Audit Technology Advisors. Bill, AP Automation, Spend and Expense Management. Oracle NetSuite, ERP and Business Software. Insight Software, F&A Automation, FP&A, BI, and more. Avid Exchange, Payments and Automation. Now here's the abstract of our 2025 Outlook and Sentiment. This important research seeks to understand how current business and economic environments are shaping corporate finance, planning, strategy, priorities, and outlooks, and what CEOs, CFOs, COOs, and CIOs are doing differently to manage in 2025 and beyond. This year's study identifies a C-Suite Financial Performance Index, FPI, and a C-Suite Spending Budget Index, SBI. Both serve as benchmarks to prior years while identifying future trends. A national survey was conducted from November 2024 to this January 2025, with nearly 300 respondents participating across North America. Okay, question one. First of all, what is your prediction for your organization's overall financial performance in 2025 versus 2024? Well, our respondents answered that 55% predict better or increased financial performance, 34% the same, and 11% decreased performance. By subtracting increases from decreases, we calculate a 2025 C-Suite Financial Performance Index, FPI, of 144%. Compared to 2024, the index was 155. Neil, what are your thoughts on these confident predictions?
Well, yes, Lindy, they're certainly confident sentiments, but not as bullish as 2024 when they were 144 to 155%. Perhaps confident with interest rates lowering this past year, or in 2024, inflation in check, but tempered by domestic political and geopolitical uncertainty.
Yeah, you're right about that one. Okay, the next question we asked in our survey, rate your financial metrics 2025 versus 2024. So our chart rates metrics by highest weighted average increases to lowest on a scale of 1 to 3. 2025 revenue led at 2.49, followed by profits 2.46, gross margin 2.38, org headcount in 2.37, and lastly SG&A at 2.31. This compares to the 2024 revenue of 2.49, the same, SG&A in 2.36, gross margin at 2.26, profits 2.24, and org headcount at 2.21. So the biggest financial metric increases are in dark gray, with revenue at 66, profits at 55, gross margin 51, and headcount at 49. SG&A was smallest increase of 45. So revenue always highest, perhaps due to the ability to control with price adjustments. Neil, what are your takeaways here?
Yes, I do agree with you about revenue and price adjustments. Strong metrics expected across the board in 2025, with weighted averages higher than 2024. Org headcount lowest decrease, likely the results of talent shortages.
That's interesting. And we see that across the board in, in our surveys, in our webcasts. It's a big problem that even the AICPA is talking about and trying to resolve. Question 3, okay. How will economic uncertainty impact your spending plans? Survey says maintain spend 43%, increase 32%, and 27% will be reducing their spend for this year. We subtract increases from decreases to calculate the 2025 C-suite spending budget index SBI of 105%. Compared to 2024, SBI is 105, but only 25% increasing the spend, versus 32% this year. Also, compared to 2025 CFO controllers SBI of 110, this is a first that the C-suite is more conservative than CFOs and controllers. Seems a little counterintuitive. Neil, what do you think about these spending sentiments?
Yeah, thanks, Lindy. I would say cautiously optimistic, not so bullish. Great macroeconomics formulating in the last couple of years. Again, I would say tempered by domestic political and geopolitical uncertainty, the most uncertainty of perhaps any time in history.
Yeah, at least since our peers and colleagues have been in business, right?
Correct.
Okay, question 4. Go on to the next slide. What will your work environment plans be in 2025? Okay, so between hybrid, fully on-site, fully remote, or maybe some other. So a large majority, 65%, plan for a hybrid combination of on-site and remote, followed by 21% full on-site and only 10% full remote. Compared to 2024, with a slight less 63% hybrid, a higher 25% on-site, and a slightly higher 12% remote. So looking at this, it's interesting that hybrid work environments are increasing, but full on-site and full remote are decreasing. Yet we hear about return to office frequently. Neil, what are your perspectives?
Yeah, thanks again, Lindy. I think that on-site differs by industry, by function, by company size. For example, retail, manufacturing, construction workers, laborers have to be on site, whereas professional services staff can often work remote. I was on an economic panel last week that predicted talent shortages for many years to come, and this is going to impact that remote versus on-site dynamic. The other thing I'll mention is that there is absolutely no question that employees prefer on-site staff, on-site talent, whereas employees prefer hybrid or remote. So I predict that there will be an employer-employee tug of war for years to come.
I think it's going to be years to come because as a partner in our firm, I'm an owner, and but I prefer working remote or hybrid. So it's an internal, challenge. It's also one that, due to COVID, due to demands, high stress jobs that people can work remotely. And then the fact of the matter is we're all getting back to traveling again as well. So, that goes to more of a hybrid or remote way of working as well.
You bet.